Good morning. This is Howie, and I'm here to help you win with money. Now, today is Thursday, January 14, 2021. Markets are at all time highs. So, this is interesting. Good stuff for the Dow. NASDAQ has been strong all year. Everything else has been good. Now, onto my trades. What I see is Riot blockchain is up, which is awesome. I already fixed that this morning. It is 10 o'clock right now. I already rolled it. But let me fix my Rocket. I have a cash secure put on Rocket. So I'm going to try to make some money on that. And here you go. You see that this thing's going to expire close to worthless tomorrow. It's already down to 10 cents. You see that the last price I got was 54. So I'm going to roll it 1 week out. 1950. I'm going to keep it the same. I'm just going to go 1 penny above the mid and see if I can get 30 bucks for one more week of risk. Again, this is holding the capital that's required to do this trade is $1,950. So I put that trade in and it looked like it went across already. There you go. It went across, and I'll show you my trades for today. And it went across. Here's the Riot. I moved Riot up to 27, and I think we just said Riot is at 28 now. So I already made money on that trade already, because I did that at 954. You see, I moved it from next week. So I shortened the week to tomorrow, and I moved it from a 2250 to a 27. But I collected cash in my pocket. Okay, before I go off on a tangent with Riot, let's go back to Rocket. Why did I row? Why did I collect another 30 something dollars? So I'm going to show you real quick. If you go to a spreadsheet, if you collect a $20 profit, and if I'm using a cash secure put, and you see here, if you divide it by the cash that I'm using, the strike price is a 1950, which is $1,950. What this tells you is, you're making 1% a week on the cash. Nowhere in the world can you make 1% a year in a savings account, right? You're barely making 1%. Some people are making 2 if you have the right account. I think some people use like Marcus or maybe a CD, but there are some high yield savings account. But I'm making 1% a week. And not every week you make money, but you can see if you can average a $10 or $15 rate of return on your cash. This is the reason why I trade options. You can manage the risk even on something this is a little bit safer. Rocket was not as risky as Riot, so you can still do this and collect a premium. And before I end today's episode, please don't forget to like, subscribe, share this with your friends if you believe these videos will help them and help you win with money. One thing I want to look at before we go is Nike. Nike has been on a tear lately, and you can see this. It was under $100, and this thing is now $140 or $150. Let's look at the 1 year chart, and you see this same thing. It dipped down. It got as low as 67 or whatever it was, and you can see that you double your money if you bought it at the bottom, right in March 2020. But what I want to do is zoom in a little bit. When we buy stocks and when you're buying investments, it's not a binary choice. It's not either Pepsi or Coke. It's not either you like the Yankees or Boston Red Sox. And in this case, it's not against Nike or whatever else is out there. So you may not like these shoes. You may make fun of Skechers, but as an investor, I want you to keep an eye on other shoemakers, and I'm going to show you why. We'll just zoom in here, and then let's add in the other shoemaker that you may not like, if this thing pulls it up, which is Under Armour. So now we're going to just do a quick comparison. So this is what the daily chart looks like. We'll zoom out on the 5-day chart. Here you can see Nike is underperforming in the last 5 days. Skechers is moving up, and U.A. is up 3% this week. Let's zoom out to 1 month. And this is a pretty tight race. You see this? This is a concept where, look, it's all within a tight range. This is where a rising tide lifts all boats, and they're all roughly in the same industry. And you can see how that impacts the stock. We'll zoom out a little bit more. And in the 3-month chart, now you can clearly see there's a divergence, right? While these two sort of huddle together, there is one here that is making a breakaway from the rest of the pack. And as these trend up, U.A. is trending up. If you got in 3 months ago, you're clearly much more happier with U.A. And for those of you who don't know, U.A. was $10 down here. Now we're looking at $15 up here. This would have been a great trade for a small investor, whereas Nike was still very expensive at $120, $29, and then up to $140. Harder to buy a lot of shares. Let's zoom out to 6 months. Now you're starting to see what I'm talking about. You notice any pattern? Nike is in the news in the last 6 months. I've been hearing about Nike. I see it on TV, and they deserve so. If you're up 48% in a year, sure, this is not a Tesla move, but this is a great performance by a big Dow company. And Skechers, while it hasn't been performing too well, it's respectable. 32% gain in 6 months. And the big winner again, U.A. $9 a share. Now you double your money. And let's hit one more chart so we can see the context. And here you will see that Nike, prior to the recession or prior to that March dip, has held up better. So if you're a long-term investor, you see this, what it's saying is it didn't drop as much and it still continued going up. But if you're a new investor and you got in after the March drop, you would have been better served buying something like a U.A. Let's do this together. Let's do this $1 at a time. As always, have a profitable day.